Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report that's about as exciting as watching paint dry unless you're into deciphering the secret language of banking. We're looking at a filing from the Federal Home Loan Bank of Pittsburgh, which sounds important, and it is if you want to understand how banks borrow money and keep the financial system humming. This is a Form 8K report, meaning it's letting investors know about something important that happened. The event was reported on March 24, 2025. The main point of this filing is about how the Federal Home Loan Bank of Pittsburgh, or FHLBank, gets its money. It mostly gets its funds from selling debt securities, which are kind of like IOUs called consolidated obligations. Think of it like this: the bank is borrowing money by selling bonds, promising to pay it back later with interest. These consolidated obligations are bonds and discount notes. These aren't just Pittsburgh's problem. All 11 federal home loan banks are responsible for them, making it a joint responsibility. So if one bank has trouble paying, the others have to pitch in. It's a bit like a group of friends co-signing a loan. There's also a regulator called the Federal Housing Finance Agency that keeps an eye on these banks. They can even make a bank pay up if another one can't handle its debts. This is important because these consolidated obligations aren't backed by the United States government. They depend on the financial strength of these 11 banks. Schedule A lists all the bonds and short-term debt the Federal Home Loan Banks plan to issue with FHLBank as the main borrower, excluding very short-term notes. This schedule is a snapshot of their borrowing activity but doesn't give the full picture of their total debt. Even though issuing these IOUs, or consolidated obligations, is significant for the FHLBank, we're not saying that any particular IOU is important. The filing mentions something important it does not cover. It doesn't include any interest rate exchange agreements. These are deals where they might swap interest rates with another party to manage their risks better. You also can't use Schedule A to see how the total amount of debt they owe changes over time. This is because it doesn't include very short-term debts and doesn't show whether the money they're borrowing is being used to pay off old debts. The numbers listed on Schedule A show the face value of the debts or consolidated obligations. They don't include any discounts, premiums, or other special deals, so the actual cost to the bank might be different from what's listed here. Now let's talk about my take on what we've just seen. The Federal Home Loan Bank of Pittsburgh is basically a bank for banks. It helps smaller banks get access to funding, which then allows them to lend money to people and businesses in their communities. This whole process is crucial for keeping the housing market and local economy stable. One thing to consider is that the health of the FHLBank is closely tied to the health of its member banks. If those smaller banks are struggling, it could impact FHLBank's ability to meet its own obligations. This is a risk, but it's also part of the system, as FHLBank is designed to support its members during tough times. The fact that these obligations aren't backed by the US government might sound scary, but it also means that FHLBank needs to be extra careful about managing its finances. This is where the regulator, the Federal Housing Finance Agency, comes in. They're there to make sure FHLBank is making smart decisions and not taking on too much risk. Overall, FHLBank plays a vital role in the financial system, especially for smaller banks and local communities. While there are risks involved, the bank is closely regulated and has a structure in place to manage those risks. It's not the most exciting topic, but it's definitely an important one to understand if you want to know how the financial world works. Thanks for watching. If you found this video helpful, please hit the like button and subscribe for more deep dives into the world of corporate filings. And don't forget to leave a comment below with any questions you have.